What to expect from the 2025 housing market from housingwire.com. You guys, this one is honestly totally up for grabs, 100% up for grabs. I don't know that we're going to see a 2025 that looked like 24, because 24 didn't look like 23, and 23 definitely didn't look like 22. So this is as much predictive from our perspective as anything. I honestly think we're going to still see prices hover and stay. I think mortgage rates are going to decline a little bit, but not a lot. And I think that it's going to be the other economic relief that people see in their budget that's going to actually help them cross the affordability line.
Yeah.
What do you think?
Yeah, no, absolutely. I agree with you 100%. Home prices are just they're going to stay stable. We've seen it nationwide. It went down just a little bit, but it's still higher than it was the previous year, and so on and so forth. So I believe right now we're at 423.
Something like, it's 423, 24. It's right there.
The year prior to that was like 418, 19, somewhere around there. Yeah. So still, we're there.
And it was in the high 300s like 2-3 years ago. So it's it's not declining fast enough for us to say it's in correction territory. Yeah. Correction territory would be a 10% change to the downside. Yeah. We ain't even close to that.
I mean, hey, Andy, I had a client. I'm looking into they're purchasing another home, and we have to put in real estate schedule owned their current property. They bought that for $823,000 in 2023.
823. Okay. All right.
I forget what month, but it was in 2023, just a couple of years ago, a year and change ago. Mm-hmm. And I looked at the comps; they were like 1.2.
What?
Yes.
In 24 months?
Correct.
Or
less.
Less than 24.
Yes.
That's crazy.
I was like, what the heck? That's huge.
That's a lot. That's like a 20% increase. Correct. Just in what? Matter of a year and a half, less than 2.
That's crazy. I was like, come on, I was like, come on, like really? I mean, I didn't do a sales comparable, but I put right there, it's worth about 1.2.
Okay, so so this is leaning a lot, guys, on the pending sales numbers, on inventory numbers. So, my expectations are we're going to see more inventory because of some of the things I had mentioned in the previous segment of the show. I think we're going to actually see more people sell because buyers are getting not selective, but they're having more choices now than they did before because inventory is higher. I think that sellers who are going to be entering their new season of life, if you will, short term, that's my short code for retiring. Yeah. I think that you're going to start seeing those people who are now retiring in 2, 3, maybe 5 years. They're going to probably start making some choices in 2025, knowing that if prices stay, I got to make that move now. My folks did that in 2018. Yeah. They sold their place in 2018, bought one in the place they were retiring to 6 years ago now, which guess what? Doubled in price. Yeah. Happened to turn out that way, but that was their choice because they were looking at the time horizon going, I know I'm going to retire in 2 years or 3 years, and they had pulled that trigger. I think we're going to see a lot more of that, especially from our boomer crowd.
No, I agree. I think we're going to have more competitive rates in 2025. If we can see 6%, that means you'll be able to buy it into the 5%, which I think will be healthy for the market. Anything lower than that is going to go bananas, and everybody's going to be jumping into the market, and we go right back to the same
problem.
there
in September.
We were there
for 3 weeks.
And I mean, you saw how crazy.
How crazy was it, right?
But from night to day, and then you see how things go really quick, and then they slow down because the market can't support that amount of demand at that present time. But I think moving forward, if the inventory increases like we see in this graph right here, in the last 4 years, 2024 is leading the way with inventory rising going into the new year. Mm-hmm. So if that trend continues, then we can really predict that price appreciation is going to continue, and then leverage increase home sales. So basically, if you see homes are for sale, you as the buyer, if you work with a knowledgeable agent, you use the data to your favor, you can really negotiate and put yourself in a position to get a really good deal because you can leverage all the information going into 2025 and use this data of 2024 to prepare yourself in 2025 to be ready to pull the trigger.
Absolutely. Absolutely.
I think the rate comment is interesting to me because if you get into the 6s and you can buy down into the 5s, I think that's the way to go. Yeah. Underneath that you're not saying is something we talked about previously, which is I think that the Fed and economists at large are using code talk for everybody get used to this as normal. Yeah. Everyone's starting to talk about the days of 4, those gone. 5s, maybe. But we ain't there yet, and we're not going there for a while. So I think they're slow walking everyone into this delicately talk. Get used to it.
Yeah. It could have also been a test to let's see what that looks like. Let's see if we can see how that looks like if we go to the 4. And they're like, whoa.
But that's like a flash. That's like a flash flood of loans coming in. But then again, normalizing the market. I think inflation is a big problem with this. I've said this before publicly. The Fed is not correcting inflation; they're chasing it. And a lot of times they're actually the cause of it. That's a whole different tangent. There's a lot of videos on that on the internet. Go look for some of them. You'll find them.
So, our deficits and all that, it creates inflation.
Yes.
So
spending
we need to start
creates
paying,
inflation.
So we need to stop.
But yeah, I think the whole normalizing
topic
of our rate environment now is really the kind of code talk I hear and I see even in writing. Yes, you're going to contend with people who are saying, well, we're still not affordable enough. There's still not enough properties. There's still pricing is out of whack. Yeah, that's all still true, but you're still telling people, well, you have to get used to it. But this is why I said earlier, the relief is going to have to come from somewhere else. If the claim is true that Trump's going to come in and say 10% cap on credit card rates, that will provide some relief for people. Of
course.
There. If somehow the tariffs don't negatively hurt us, but they actually help us, that could help on the budget, which can help affordability. I think they're hoping that that's the case so that they don't have to rely on the rates to do the work.
Yeah.
That's my theory. That's my theory of the case.
Yep. Well, that's another topic.
Agree, disagree?
No, I agree. The thing with the toll tariffs and all that good stuff, it's honestly, it could be a catch-22, but we'll see. What I do like about it is he wants to focus here. Like, why don't we build here, charge everyone else this higher tariff? Because just even a 10% would make a huge difference about a way of how to pay down this deficit that we're in.
Right. But the question that keeps coming up is, who's paying that 10%? Well, it's going to hit you on the shelf. It's going to hit you in the pocket because I'm going to go buy that thing that now has a higher price tag. Yeah. But the whole point is maybe I'm not buying that. I'm buying something that's here instead.
That's here instead, so that we can start bringing our prices lower for what our cost of goods. And now everybody else pays a tariff for
the things that are enough
that we're selling, right? It's.
I mean, it should be.
In theory, yes, absolutely, that would work. I would love for that to work out because I also think that there's absorbable costs as well because if we can control some energy stuff too, and energy makes its way through the entire economy and all the things that we pay money for, then that could produce some reduced costs. People who are anti-capitalist go, no, capitalist pigs are just going to keep the margin and take the profit. That could be true, but if you have some absorbable costs that reduce your load of carrying inventory, then that could make its way to the shelf and actually impact people in their pockets. So I'm hopeful for that. We'll just see what we'll see if that happens. By the way, separate tangent, this whole grocery store thing about like grocery stores are greedy. Like, did you guys hear the stat from PBD that like the grocery stores, they on average make 1% profit
their
after expenses?
Very slim margin.
Do you really think so? It's minimal like that?
Yeah. But okay, fine. Hold on. Even if it's 10%.
Yeah.
It's not 30.
Yeah.
It's still 10.
Yeah.
Would you run a business on a 10% profit margin without taking a second look and going, is this even worth doing?
They have volume, stores everywhere, but
I mean, is that up to like Walmart's too? I sincerely doubt that, especially since everything's coming from
China.
India, China, like they're getting everything, for cheaper.
Yeah, I don't know who is baked into that number, but I heard it and I'm like, how do you run a business on a 1% margin? Like that's not even room for like errors. I mean, that's a big 1%.
That's a big 1%. I want to know what that comes out to.
That seems very tight.
1%.
Yeah,
that seems very tight.
I mean, when you saw that empty building that we have right here started with Albertsons, it's been gone for a while.
That thing's been boarded up for years.
Since I was in elementary, that thing has been out of business, and that's not that long.
Dude, whatever. That was like 12 years ago now, or 10, something like that.
Getting younger, Brian. Getting younger, Brian.
Yeah, right. So 2025, guys, what else do you think it's going to look like? Any final thoughts? What you think the housing outlook is for the new year?
I mean,
I think sellers that need to sell are going to be up on the market, and hopefully someone gives them a good deal for Christmas.
Yeah. Yep. I agree. I think it's going to be more sellers, more inventory. I think rates are going to take a little bit of a breath coming into the new year.
You bring up a good point.
Go ahead.
I was looking at the mortgage-backed securities from last year in November, exactly, and rates were actually higher per the graphs. And into December, rates started to ease up, and I was looking at the trajectory from October into November into December, and there was a lot of similarities where in November, towards this time, it was uncertain, it was choppy, it was like this, and then into December we started seeing it go up, and then we started easing up, which we had a really good December. So fingers crossed that the data and the patterns, similarly bring something like that into the end of the year. So I'm very hopeful, and if that's the case, it's gonna be good for people going into 2025.
Yeah. I mean, I think rates are gonna still continue to be where they're at. They're gonna stay where they're at right now for a while.
Yeah, the Fed isn't tipping their hand that they're going to do anything.
And I mean,
to help
we heard
the
it when
markets
we're
beyond
at
what they're
UW.
doing.
Yeah, when we went to UWM, even Matt Ishbot, and they have all these financial analysts out there. They already predicted this is what's going to happen. But here's the thing: people need to pay debt. People are getting in credit card debt right now, and it's happening every time we're running credit. I mean, you just talked about this with a client. Last year, we did cash out. This year, here it goes again. And it's not because of their bad habits of a client's. It's just inflation is a real thing.
I was looking at it, and they're literally just getting ate up by interest. I mean, they do have high payments, but if you tack on the interest on top of that, you're drowning yourself every month and more and more and more. So it's like I have no choice. And we talked about it. Like, do you want to consolidate into a lower rate or keep paying these 30%? At least you have everything under one roof. Your rate's fixed, and then down the line you could bring that down even lower and beat out your quote unquote debt even more.
Yeah.
So I think good time to move into 2025.
I mean,
good times moving ahead. Good times ahead. Choo choo.
Yeah, change is good. You know what I mean? And I'm just looking forward to the new change. But I think 2025, we're gonna see more homes available. We're gonna start seeing not a huge uptick on it, but it'll be, pretty fairly slow but gradual and good.